when you really understand that cash flow is not the same thing as income because of the way the accounting rules work, that doesn't mean that the income statement isn't useful, because it does tell you something very important. But cash flow, you have to use these together, and I think people often ignore the cash flow statement because they just look at, if you look at headlines on any financial newspaper, they always report revenue and they report earnings per share. And they don't really talk about cash flow, and that can be very important to how businesses operate. Obviously, if you don't have enough cash, you run out of business. So when you start that top line, what you're essentially doing is you're taking out adding back in all of the non-cash expenses that we took out in the income statement. So that first thing that you do is you add back depreciation and amortization. There's a lot of chicanery that goes around with these depreciation and amortization because, people report these numbers